Hi there, good afternoon. I'm Manglam Malu. You're watching Mutual Fund Corner. With me is Sumaira Abidi. In the Mutual Fund Corner, like every Tuesday and Thursday, we answer all your mutual fund investment related queries. Before we do that, a quick look at the markets. There is a bit of a surge that we're seeing on the Nifty as well as the Sensex. We're closing in towards the higher end of today's trading range. The Nifty has reconquered the 11,400 mark. The Sensex too sitting higher with a gain of almost 170 odd points. Majority of the gains coming by from on account of the banking sector. The Nifty bank is actually the one which is sitting at the high point of the day, close to around 29,500 out there with a gain of about 0.75%. The mid-cap index, which was outperforming all through the course of the day, has now is now gaining in line with the frontline indices. That's primarily because all the other frontline indices have caught up. First up, all the top stories, and then we hand it over to Sumaira. Indian market moves to the high point of the day. Big moves seen in Reliance. Reliance pulls the key indices higher. Mid-cap index outperforms. The Jet Airways stock extends yesterday's rally after lenders take control. Naresh Goyal steps down as the chairman and exits the company's board, retains 24% stake. Brokerages, however, remain cautious. DLF shares rise on the back of a 3,300 crore rupee QIP with the floor price placed at 193 rupees per share. Indiabulls Housing too tops the chart after management says they are confident of a 20% loan growth in FY20. IT stocks, they are the big casualty. Today, investors remain cautious as top brokerages expect lower banking business on signs of a slowdown coming in the developed markets. The Congress party talks about their minimum income guarantee scheme, promises 72,000 rupees a year to 5 crore of the poorest families. Former Reserve Bank Governor Raghuram Rajan says farm income schemes are effective only if they target the poorest of the poor. With that, we hand it over to Sumaira, who has with her a guest. Sumaira.
Mangalam, thanks very much for that. Vishal Goenka, Director at Wealthtree Investments and Advisory LLP, now joins in. Hi, Vishal. Good afternoon. Good to see you here. And we have our first caller who's through to us already. So Rahul Surendran is on the line with us from Kerala. Hi, Rahul. Good afternoon. How can we help you?
Yeah, hi, Sumaira. Good afternoon. And thanks for having me in the call.
Sure. Tell us.
I'm just consistently investing in mutual funds, and my portfolios are like I'm investing like 4,000 in SBI Blue Chip Fund and 4,000 in unit-linked Endowment Plus, and 5,000 in mid-cap opportunities. And Franklin India smaller funds, I'm investing 2,000, and in ICICI Active Asset Balance Fund 16,500, and Future Perfect 4,000. So my goal is that I'm looking for the retirement fund and for my daughter's education.
Okay, so do you know at what interval you're going to need these funds and how much are you looking to accumulate for both the goals?
Yeah, 2 crore for my retirement and 1 crore for my daughter's education, and I'll be consistently investing for another 10 to 15 more years. Okay,
so at least 15 years for your child's education and then add another 10, 15 perhaps to that for your retirement. Okay, Vishal, look at the portfolio. So my, little bit of problem is, of course, with the ULIP. I'm just wondering, Rahul, any particular reason you chose the ULIP plan? I mean, given that you say you're regularly looking at investing in mutual funds, why did you choose a ULIP plan?
Yeah, the ULIP actually came, I took it along with my life insurance, along with my housing loan. Which started in 2008. So I would continue that for another 2 more years. Maybe after that, I'll be having a switch option. Okay. So it wasn't entirely by choice. Okay, Vishal, over to you. How does it look?
Looking at this mutual fund portfolio, it's good enough. Okay, there's nothing much to make changes on his mutual fund portfolio. I mean, you rightly said, someone should not mix his investments and insurance need together. They should look purely insurance and pure investment as a need, so that they can fulfill both of their need at any point of time. Okay, so as he never had a choice to not to take ULIP, and he is by force taken ULIP, I would recommend him to stop as soon as possible is all 3 ULIP plans which he have taken, and he can top up his term cover, which is very less as per his requirement. Okay, so and whatever money is left after taking term cover, he can look to add on that to 2 schemes where he can add 2 multi-cap schemes like ICICI Prudential Multi-Cap and Tata Equity PE Multi-Cap in his portfolio.
Okay, Rahul, does that work for you?
Yeah, that's fine, Sumaira. Thanks a lot then.
Okay, Rahul, all the very best. Thanks so much for calling in. Okay, up next, we have a query that has come to us on Twitter. Hemant Purandare has written to us. He's 49 years old. He's investing about 10,000 rupees cumulatively in a few funds. He has 4,000 in the Aditya Birla Sun Life Equity Fund, 4,000 in the Franklin India Fund, 2,000 in the DSP Small Cap Fund. These are all the growth options that he's chosen. He's been invested now for the last 3 years, and naturally he's not happy with the returns. Yeah. So, while we don't know where these three schemes actually fit in his overall portfolio, but if you were to just compare the schemes themselves, and, what would you advise? I mean, could he change something? Should he perhaps look at a longer time horizon? What should he do?
See, first thing, last 3 years SIP, you are aware that majorly all have been, given similar kind of return. So SIP is meant for more than 3 years. It should be, 5 to 7 years plus kind of investment horizon. Okay. If we look at his fund selection, he has taken multi-cap, mid-cap, and small cap. Diversify his portfolio. What he can look to stop investment in DSP small cap. And that money he can look to allocate to, another small cap company like, Reliance Small Cap or, L&T Emerging Businesses kind of funds, rather investing in DSP Small Cap.
Okay, Hemant, I hope you were listening in to that advice. Anshuman Singh is now on the line with us from Rajasthan. Hi, Anshuman. Good afternoon. What's your question? Anshuman, can you hear me?
Hello.
Hi, go ahead. What's your query?
Hello.
Hi, Anshuman. We can hear you. Can you hear us? Okay, I believe we're not able to get a stable connection with Anshuman Singh. Anyway, he's 25 years old. Looks like he's just about getting started, with his investment planning. He, for the moment, is looking to invest about 5,000 rupees a month. I'm going to assume that because he's just 25, his goal is wealth accumulation for the very, very long term. Therefore, assume a minimum of 20 years. Okay, on that basis, where would you advise him to go? I mean, and how many funds should he look at? How much should he look at increasing this amount annually?
Sumaira, he can look to invest in 3 funds, okay, diversified, maybe, a multi-cap, mid-cap, and a small cap, okay. So, he being young, he can choose more to invest in mid-cap and small cap for a longer horizon and less in multi-cap, okay. Now, we are not able to come across, what is his time horizon to invest. So it's very difficult, to recommend funds in those horizon. But he can have allocation to, 30% a multi-cap fund and remaining, 35% in small cap and mid-cap kind of funds. And talking incremental of his investment, he should have, a basic goal that his earning, he should have at least 30% invested in savings. Okay.
Okay. Okay, so Anshuman, I hope, we weren't able to hear you very well, but I hope you've heard that at least 30% of your take home or your the money that you earn should go into investments and, look at scaling up your investments annually. So for now it's 5,000, but I hope you look at, notching that higher in the years to come. Next, Rajani Turad has written to us from Qatar. So this is a very interesting query. Vishal, you're going to enjoy answering this one. She's 30 years old. She's a housewife. So she's already investing about 13,000 rupees every month. And she's already, she's got a goal that she's going to increase this to about 25,000. So this is what we hope for in an ideal investor, right? Yeah. But the flip side is that while she is looking to invest for her child, she's looking at a tax-saving option for the child. So that, of course, again, remains a misnomer in, a lot of the investors' minds. But nevertheless, the rest of her query is that she has some lump sum amount to invest, which is about 2 to 3 lakhs, which she wants to invest only for 6 months to a year. So once again, the time period too short for mutual funds. The portfolio that she has currently is the SBI Blue Chip, HDFC Mid Cap, HDFC Small Cap, as well as the Mirae Asset India Equity Fund. Now, in each of these, she's investing about 2 to 4,000. She's chosen the growth plan, and they're all regular schemes. So she's not chosen the direct option here. How can you amend this portfolio to actually, I mean, while she's on the right track, she's got some of the founding principles wrong. So how can we set her on track again?
See, considering her investments in the schemes, what she's invested in, those are best in the categories.
Yeah.
She can continue in those schemes. Okay. Now, coming to her query to invest for 6 to 1 year time, 2 to 3 lakhs, 6 months to 1 year time, 2 to 3 lakhs rupees. I'm sure, I mean, the reason she's want to park this money is for some specific goal or specific need in short term. That's the reason she's looking for that kind of horizon. So the only option where we can look to invest...
That is the hope, at least.
The best option to invest is a liquid plus category. Okay, in that she can look to invest in Aditya Birla low duration fund. Okay, in a growth option again, because we don't know, I mean, what tax bracket she falls in.
Yeah.
Okay, and her query to increase by another 12,000 rupees. By the query, we can understand it's just a tax saving kind of instrument she's looking for. We don't know why.
So I assume she's actually looking to invest for her child's education, but she has chosen the tax saving route currently. So what we need to do is, keep her goal intact, which is her child's education. Her child is currently 4 years old. So I'm assuming she's going to need the money in about 14 to 20 years from now. The only thing is move it from tax saving to more lucrative investments. Would you think?
See, whether you invest in ELSs or in an open-ended mutual fund, it's more or less, I mean, its underlying asset is equity, okay? So,
but wouldn't you think another fund would be better performing? Or would ELSs be at par?
See, ELSs are all multi-cap ELSs, okay? So that is also not an issue.
Okay.
The only thing is that comes with 3-year lock-in, okay? And what we can do, we can add on, mid-cap and small-cap funds plus ELSs, okay, which should may take care of tax saving if she's looking for also, okay. So what we can look to add ELSs scheme, we can add, Tata India tax saving or Mirai India tax saver, okay. So these are the category in tax saving she can look to invest, and she can add, say, 3,000 SIP in L&T mid-cap. That is one of the best mid-cap category performing fund. And a small cap, that is a Reliance small cap fund.
So you wouldn't, I mean, since you are recommending a mid-cap or a small cap, should she not augment the funds that she already has, the investments that she already has, or diversify to another house?
So they have, she got an HDFC mid-cap and HDFC small cap, okay, and SBI blue chip. So she got, I mean, all the flavor already. The only thing what we are doing, we are just adding on another fund in that same category.
Okay, Rajani, I hope you were listening in to that, and I hope this advice helps you. Our final query comes in from Felix Bernard, who's written to us from Tamil Nadu. So he says that he is an active trader. He's a full-time trader, in fact, in the equity market, but he now wants to invest in mutual funds, an area that's completely new to him. So he has about 30 lakhs already. He wants to invest for about 10 years from now. So, I don't know if he's looking at SIP in the future, but for now, his query is concentrated on this lump sum investment. How can you then stagger this? I mean, should he look at sort of like a STP, a transfer plan or something?
Sumaira, see, this investment is for 10 years. Okay, so whether he invests lump sum or STP will not make a huge difference for that tenure. What I would divide this portfolio, say 50% in a multi-cap fund, 25% in a mid-cap fund, and 25% in a small-cap fund. Okay, so 50% what he's investing in a, I mean, what I'm asking to invest in a multi-cap fund, where we can put, say, 7.5 lakh in ICICI Prudential multi-cap category, and 7.5 lakhs in Tata India Equity PE fund, and L&T mid-cap, and Reliance small-cap, another 7.5 lakh.
Okay, Felix, all the very best to you, and I hope you're equally successful with your mutual fund portfolio as well. But Vishal, before I thank you, I have a quick question of my own. We've a lot of fund managers recently, and given the declining state of flows into mutual funds, a lot of blame has been put the high net worth individuals or the most savvy investors, considering that they might want to keep away ahead. Understanding from your own clients, I mean, has money started flowing back you're getting from your own clients?
Last 7-8 months has been, money coming in manner. I mean, money was parked in last, couple of months, money has also, okay, and side. Mutual fund as an equity category.
Nifty holding above the 11,400 mark. We have important news coming in on a couple of these mid caps. HCC, that is the one that should come up for you on your screens. The company has said that they will, transfer arbitration awards claims to the tune of around 1750 crores to investors, and they will use this money to pay down debt to the tune of 1250 crores. Remember, CNBC-TV18 had reported this first. It was Nimesh who alerted us that this is something which will happen. This transaction will result in the partial write-down of the company's net worth. So we'll keep an eye out on that. That stock higher by about 6%. Interglobe Aviation, that is the one that should come up for you. It's been a big mover over the last 1 month and now is suddenly surged to the high point of the day. Remember, a part of the street believed that with Jet's resolution coming by, maybe Interglobe Aviation may not get the market share benefits as Jet is now on its path to resolution. However, the stock has moved higher and is at the high point of the day. A couple of consumption stocks doing fairly well as well. Marico and Page Industries, both of them moving to the higher end of today's trading range as we speak. On that note, let's get in some word coming in from Andrew Holland of Avendus Capital on his views on the markets as well as sector outlook.
My view is that the US is in recession and everything else will follow soon after. That means that yields, as we've seen anyway, will go down, and that will take a risk-off trade, and India will be seen as a safe haven, which is why you're seeing so much flows coming back to India. And there's obviously that bit of catch-up as well. So I would expect these flows to continue quite strongly throughout the next 6 months. The RBI in April can easily reduce interest rates by 50 basis points if they have the inclination to do so. So there's your liquidity factor, which is going to be helpful. And then obviously as global yields fall, that's going to be another factor which will help that the RBI in their thinking. And commodity prices will be the next leg. So if I look at that, then both shorter term and the next 6 months should be good for kind of liquidity driven type stocks.
All right, we were talking about a lot of the non-index large caps. Just keep an eye out on a couple of these index stocks. Bajaj Finance too has surged to the high point of the day, taking the Nifty above that 11,410 mark. So with that, we wind down on this show. On the other side of the break, we'll have closing bell take you through the last hour of trade. But as we wind down, here's a CNBC-TV18 exclusive. Former Governor of the Central Bank, Raghuram Rajan, says he doubts if India is growing at 7%. As there are no jobs. Speaking to my colleague Lata Venkatesh, he says clouds over the GDP need to be cleared by appointing respected economists to oversee data. Thank you for watching.
Right now, some rating agency has marked down India's FY20 growth rate to below 7%, to 6.8. What's your own sense of the current India growth story over the next couple of years?
Look, I'm in the camp that I have no idea what the statistics are at this point. We've moved them up, down, we've changed them. I think what we need is a revamp to really figure out, what our true growth rate is. Certainly, I know one minister has said, how can we be growing at 7% and not have jobs? Well, one possibility is we're not growing at 7%. But really, I think the kind of demand coming from out there that seems to, at least at this point, anecdotal, but we'll know from the elections, is that we need economic growth that reaches us. That we need stronger sort of broad-based growth, which primarily for most people means good jobs. Okay. And what we need to do is focus on that. How do we create good jobs for the vast number of people who are leaving schools, who are leaving agriculture, who are leaving universities, in such a way that they can expand India's growth. A lot of people have said the population dividend should not become a population curse. This is the time when we need to make sure that in fact doesn't happen.
Okay. If I can get a one-line answer from you, are you worried about the Indian Statistical Organization and the data put out?
Look, I'm not worried. I just think we need now to essentially clean up, find out what in fact is the source of confusion with the new GDP numbers, with the revisions, etc. And I would say setting up an impartial body to look at it is an important step to restoring confidence. And it may well be that that body pronounces do thus and such to rebuild confidence, but we absolutely need better confidence in our GDP numbers now, given the back and forth that we've had.